What went down in the auto sector this week? We look at the major earnings that were reported across the two-wheeler makers as well as one of the biggest automaker in the four-wheeler space. Let's deep dive into this. Well, did you know that 1 in every 4 scooters sold in India is that of TVS? There may be an upcoming scooter will slightly be on the cheaper side, competing with the likes of Ola as well as Eicher Energy and give a value add to its customers. That's not all. On the back of a strong Q4 earnings, the company reported 22% revenue growth. Now, EBITDA margins, which have been a key for the company, has been around 8 to 9% historically. But over the last 4 to 6 quarters, the company has done really well and has crossed the double-digit mark and is competitively above the 11% range for the present quarter. And that's not all. TVS has been a rewarder for its shareholders, giving upwards of 66% returns over the past 1 year. But should we own the stock now? Brokerages have been positive on the stock, with MK having a target price of roughly 2,250, which is a 10% upside from the current levels. They say that the company is the only one amongst Hero as well as Bajaj Auto to have a strong scooters as well as an EV as well as a motorcycle portfolio going forward as well. Next, we're looking at one of TVS's competitors, which has given 88% returns in the past 1 year. Yes, we're talking about Hero MotoCorp, and it is buzzing on the back of its Q4 earnings. The company reported a 14% revenue growth, while its EBITDA margins were higher by 140 basis points, coming in at 14.3%. And the best part is, the stock is still cheaper compared to other players such as Bajaj Auto. On PE multiple, the company trades at roughly 19 times versus 31 times for someone like a TVS Motors, which is higher compared to its 5-year average. What PE ratio means is the price that you pay over and above the company's current earnings going forward. Essentially, the lower the PE ratio, the better for investors like you and me. This works well for Hero MotoCorp, as most brokerages see an 18 to 22% upside from the current levels. Citi has a target price of roughly 5,500, while MK has a target price of 6,000 rupees per share, which is roughly 22 to 24% upside from the current levels. Well, moving on to the third stock, and a company which is always on everyone's radar, Tata Motors. The company came up with strong Q4 numbers, but the FY25 commentary was very weak, which led to the stock tanking 9% on Monday, where the stock has eroded roughly 27,000 crore of market cap in this particular session as well. Historically, the company has always been affected with high debt and higher interest costs, which led to lower EBITDA margins as well as very poor free cash flow. But post the pandemic, the company has actually had a turnaround with higher share of SUV sales and the electrification theme playing out in the company's favor. The company currently has a 70% market share in the EV space, which means 7 out of every 10 EVs sold in India are of Tata Motors. Fancy this! Over the past 1 year, the company has given a whopping 104% returns, much higher than the Nifty returns of roughly 20%. And over the course of the past year, the company has grown its sales to come in for a total of 5,70,000. Do note that the company's stock hit an all-time low of just 77 rupees in financial year 20, just at the onset of COVID-19. Post that, the company has run up a whopping 12 times to given roughly 1200% of returns, crossing the 1,000 mark just this year. And do note, if you listen to the late great Mr. Rakesh Jhunjhunwala and bought the stock at the low of 80 when he was shouting on his lungs to give it a buy recommendation, you would have made handsome returns. But that's all the past. What does the company hold, and what led to the major price fall on Monday? The company's FY25 commentary was poor on all its segments, starting with its passenger vehicle, where it sees low 3 to 4% growth in sales, while JLR sees just 2% growth over the next 2 years, according to Elara Securities. Its JLR division's sales have also been coming down, with its order book down to 1,33,000, lower compared to the previous year, and the guidance for the next year is not very compelling. One of the key notables for the company is the demerger of the commercial vehicle as well as the passenger vehicle business, which will aid the higher margins for the commercial vehicle business going forward. This could potentially lead to a re-rating of the CV business as well, And a key monitorable for the stock will be the split when announced. The last company we're tracking is another two-wheeler maker on the back of its Q4 earnings, which is Eicher Motors. The company reported 8.35 lakh units sold in a fiscal year, which is the highest in its history, but brokerages are not very positive. They have been highlighting the replacement demand, which is key growth driver for the company, essentially meaning that a first-time buyer who buys a 125cc bike essentially moderates and upgrades to a Eicher Motors. That demand has remained elusive for the company. Brokerages have been highlighting the same fact, with MK having a target price of roughly 3,400 rupees per share, which is a 24% downside from the current levels. They have been saying that the competition in the 450cc segment with the likes of Bajaj, Harley Davidson as well as Triumph entering into the segment in this particular year will be a key down point for the company. Finally, which stocks are the brokerages most positive on? Hero MotoCorp has definitely won this battle, with 66% of brokers having a buy call on the stock with a higher target price compared to this level. But that's all we had on this week's Auto Focus. Stay tuned to NDTV Profit for more.